Nilesh, now a question on IT services as well, because there's so many people who would want to understand from you in particular that how do you think about them, considering that the companies even now are not sounding circumspect about growth. Sure, it may taper off from what it was in FY22, base effect and all of that, and basic demand, but still, it's not growth which is looking weak. But the stocks have obviously come off. How are you looking at the IT services particularly?
Neeraj, within IT services, I think investors need to essentially, in a way, differentiate between the very large top 5 IT services companies and rest of the pack. The top 5 IT services companies are probably growth opportunities, which is probably into low teens or mid-teens at best. And I'll give you a small kind of thing that if I were to kind of look at Infosys, a company which we all have, tracked for a long period of time, pretty much the poster boy of India's IT sector. I think over the last 1 year and over the last 3 years, the earnings growth has been not more than 15%. Okay. Now keep in mind that in your best year, and probably your best company has grown at best 15% in terms of earnings. And if you were to kind of look at, say, the last 10 years, okay, FY12 to FY22, 10 years, a decade, the top line growth, the growth in operating profits has been more like 10 to 12%. With all the rupee depreciation and everything, okay? So we need to essentially keep this in mind. And therefore, you need to take a step back and say that these are like pretty much like our, say, consumer companies, consumer product companies, which will grow at 10-15%.
Okay.
And we need to go in with these kind of expectations. Then there are, of course, a whole bunch of tier 2, mid-tier companies which are doing something very, very specialized. Somebody is aligned with maybe a Microsoft to implement Azure, and somebody is aligned with somebody else to implement cloud and things of that kind. Those are the kind of companies which may pretty much witness much higher growth. Which 6 months back, we would have called them as the hyperscalers. Okay.
Okay.
And we should probably be more focused on that because their stock prices have also come off and maybe will come off even further if the US markets continue to decline, NASDAQ continues to decline. So they will continue to suffer from collateral damage. But that will again create a fantastic opportunity to own them for the next few years. So I would say that while there is more risk off in the tech space, in the new age space, be more focused and watch out for those tier 2 mid-cap IT companies rather than looking at those big boys.